Welcome to a quick FAQ video about flat rate VAT changes and what they mean for you and your business. So, on the original flat rate scheme, as you probably know, you had a certain percentage you could use in order to work out what you pay to HMRC. So, for example, if you had £1,000 invoice, you would add the 20% VAT onto it. And to work out what you pay to HMRC, you would multiply now by your specific flat rate percentage. So, this means you didn't have to do any kind of extra admin to keep track of what VAT you had to reclaim from HMRC, such as a standard rate scheme. You have to keep track of all your VAT receipts. You have to make sure the correct amount has been reclaimed each quarter. And you have to generally just do more bookkeeping. And the flat rate scheme allows you to just keep that all to a minimal and just basically multiply your turnover by a percentage to work out your liability. And you wouldn't have to do anywhere near as much bookkeeping as you would on the standard rate scheme. So let's say it was 14.5%. It's going to be for like IT contractors, for example. I'm just giving you a very generic example here. So your liability would then be £174. So your company gained £200 and it had to pay £174 to HMRC. So it essentially made £26 on that particular invoice that it can use to go against your VAT expenses that you had each month, for example. And that would just kind of like help you reclaim some of the VAT without having to do any of the bookkeeping. And what happened was HMRC wasn't quite happy with that because most people were actually making a profit on it rather than it going against their expenses. So they were just like, okay, no, we're going to change it. If you have under a certain amount of expenses, you're going to pay 16.5% regardless of what trade sector you're in. And before I get into what the expense amounts are, I'll just give you a quick example with the new percentage. So £1,000 invoice plus VAT, 1,200, and then you multiply 1,200 by 16.5% is £198 you've got to pay to HMRC. So you've gained 200 and you've got to pay 198. The gain isn't looking so good anymore. So it's probably not really going to pay for anything at all. And at this point, you might want to consider going onto the standard rate scheme if you've got a lot of expenses, or you can just deregister for VAT altogether if you don't want to deal with it. But on the standard rate scheme, you'll probably get a little bit more money back. So from a financial perspective, standard rate works better, especially if you're invoicing other businesses. If you're invoicing customers and you don't need to be registered for VAT, so if your turnover for the year is less than £85,000, you don't need to be registered for VAT. So that's kind of the comparison between old flat rate scheme and new flat rate scheme with the limited cost trader 16.5%. That kind of gives you a little bit of perspective on what they've done there. So what are the two criteria that you have to meet in order to use your old original percentage? So you've got to make sure that you spend more than 2% of VAT inclusive turnover on goods. And I'll get into what goods are in a little bit. So whatever your total turnover for the year is, including the extra VAT on top, multiply that by 2%. Whatever that figure is, you've got to spend more than that on your goods. The second criteria is that that amount also has to be greater than £1,000 for the year. So if you multiply your gross turnover figure plus VAT by 2% and it turns out to be less than £1,000, you will still be a limited cost trader. So if you don't meet these two things, you will be a limited cost trader. So quick example, let's say you invoice £4,000 per month, and that doesn't include VAT, so let's add the VAT on. So 4,800 including VAT for the year is £57,600. That's your VAT inclusive turnover. So if we multiply that by 2%, we will get £1,152. So this is the amount you've got to spend on goods. And you'll probably be wondering, what is goods? So goods are materials that you need to buy to provide your services. Any specific tools, equipment does not count, food does not count, accommodation does not count. None of the indirect costs of running your business. So direct material expenses, tools, goods that you need to purchase in order to provide a service, those would be considered goods. and have to be related to your trade. So if you happen to spend over this £1,152 on your goods for the year, then you can actually use your original flat rate percentage, and that will mean you get a better gain back from your company. So if you don't spend anywhere near that on your goods and you're invoicing clients, so customers, specifically like individual people, you might want to consider deregistering for VAT because you'll give them a better price. Otherwise, if you're invoicing other businesses, it doesn't harm you to be on the flat rate scheme unless you just literally don't want to submit VAT returns anymore. Then you can obviously deregister as well. So as long as you're under £85,000 in turnover, then you're good for this. And just remember that you can actually work this out every quarter. So on your VAT returns, when you decide whether you submit it, at which percentage, you have to work it out. So let's say you estimate your turnover for the year as this amount here, and you need to spend at least this for the year on your goods, which is also over £1,000. So per VAT quarter, you need to spend at least £288 in order to be your normal flat rate percentage. So that's how you would work out that figure. And that's pretty much the flat rate VAT changes for you in a nutshell. I mean, it's up to you what you decide, but obviously standard rate scheme will give you a better financial benefit, especially if you've got a little bit more expenses going on. Flat rate scheme won't affect you too much. It won't really give you much other than the first year, which will give you the 15.5% reduced amount. So flat rate scheme won't hurt you if you're invoicing other businesses. You can stay on that. You will still get a little bit of money at least to go towards your expenses. Otherwise, you can just deregister for that if your circumstances allow. So that's my quick FAQ video on the flat rate VAT changes. If you do have any questions, feel free to let us know and we'll get back to you as soon as we can.